Good morning from Los Angeles. Welcome to Trading with Sergio, Thursday edition. Couldn't do it yesterday. A lot of other things going on. Yeah, welcome. I'm going to do them as often as I can, 10 a.m. Pacific, 1 p.m. Eastern. I'll go through the positions. I have a 1 hour hard break today. So actually, let me put the link up if you guys want to show up. So I have no topic today. Just talk about markets, maybe do a couple of trades if it presents itself. So for my members, I thought we had a good session yesterday. So I have a members group, Telegram chat group. I thought the session was pretty good yesterday. It goes about 90 minutes. There's more one-on-one interaction. And yeah, that's going well. And what's going on today? Today we opened higher, went lower, went higher, went lower. It's just basically just not much going on. But a lot of big moves in stocks, individual stocks, obviously, one being Tesla. Look, I'm a huge fan of Elon Musk. I think he's a genius. I think he should live forever. But the stock is something else. You know, there's a lot of groupies in a lot of these stocks, okay? The Palantir groupies and Hood groupies, Robinhood groupies, Tesla groupies. You know, I don't want to call them groupies and insulting or whatever, but they have a belief that these companies should be valued differently. And that's a little bit of the topic I want to talk about. As a trader of 30 plus years, Wall Street, and now my own family account, we're creatures of habit, okay? And we tend to create biases. Obviously, we're human. We have emotions. We have fear. We have greed. We have unrealistic expectations. And I believe Tesla is one of those situations. When a stock goes down 10% today, 30 points, after the horrendous earnings report yesterday, I mean, there was not one positive thing in that report, okay? Specifically with the EV credits going away, it's going to hurt them. I mean, look, the sales have been already hurt with what's going on, what happened with MAGA and Trump and all that stuff. That's the political side. That'll come, that'll go. But a lot of people are treating these companies as something that they're not because they created biases for themselves. Are all of these stocks, Tesla specifically, let's go 3. In fact, you know what we should do is we should maybe do a little technically speaking corner today. They've created biases. You know, you go on the internet, you go on YouTube, you go on X. You know, there are groupies of these stocks, cults to a point, that none of these companies can do wrong, and they're worth trillions of dollars in market capitalization. Tesla almost got to $1 trillion market cap. Today it's not. Still, if you put Tesla and compare it to, I think Tesla combined, just one company, is worth more than 5 major auto companies because people don't treat Tesla as a car company. I get it. I get the point. They have a lot of things going for themselves. They have the Optimus robot that's going to come out. Could be $1 trillion business. Potentially could be. They have RoboCab coming up. Could be $1 trillion business. Again, with the caveat that I'm saying could be. Not is. Not today. In the future sometime. And what these folks do is they put that future in, or they want to put that future in because they created this bias to today's pricing, today's valuation. Valuation matters. Earnings matter. Revenues matter. Everything, all these metrics that most people don't pay any attention anymore. It all matters. So, you can create a bunch of biases as a trader or as an investor. You can create a recency bias. You can create, obviously, a personal biases because you have the product, you're using the product, and then you have this attachment to the product, which is, in Tesla's case, is the car. It's an amazing car. I think it's the best electric vehicle out on the planet. But then there's a company that produces this car, which is called Tesla. They have the factories, they have the workers. It's a business. As a car company, Tesla, as just a car company, Tesla should not be valued more in itself, by itself, than Toyota, Mercedes-Benz, BMW, Nissan, Bentley, and all these Jaguar, all these car companies put together. It shouldn't be Ford, GM. They're all car companies. Is the car better than any EV that the other companies produce? Possibly. But again, it's a car company. And until all these additional revenue streams are kicking in, as a person, creating a bias and pricing it into today's valuation is nonsense. Now, I do understand Wall Street looks ahead, but what's happening now is that we're looking so far ahead. And yes, Optimus could be a trillion business on its own. Yes, RoboCap could be a trillion business on its own. But is it accretive? And how much we should fast forward all these things that are coming down the pipe? And how much of that valuation should we add into today? Not, 6 months ahead. Yes, I do understand looking ahead is what we do on Wall Street. But there is no timeline. There is no concrete timeline. Doesn't mean that Tesla is not a wonderful company and could be a $3-4 trillion market capitalization company. But expecting it to happen today and being disappointed when the stock is only worth $900 billion combined, more than all other major car companies combined, no. To me, I look at the stock differently than the product. The stock's valuation is extremely high, with sales declining, and that's the only thing that they're producing. That's the only money that's coming in. That's the only revenue source that they have now. And they need expenditures to support all these other avenues of potential future earnings and revenues, which is the robots, which is the RoboCab, and all these things. The money that's coming in is only from cars, sales, services, and things like that. So, creating this bias saying that, Tesla should be $1,000 a share is nonsense. Again, I love the guy. I love the car. The stock, not so much. I've done a video about this in the past, got some heat. Tesla, as a stock, has been dead money for the last 4 years plus. Now, if you bought Tesla 10 years ago, you're way ahead. But for the last 4.5 years, it's been dead money, while the S&P 500 is up over 60%. So now, is Tesla a good trading stock? Absolutely, because it moves wildly. It went from 150 after the election. It's got up as high as 450. We're back down to 300. But the point I'm trying to make in all of this is today's valuation of Tesla, even with the 30 points down today, is that high? My opinion, yes. And I'm not smart enough to put a valuation on Tesla because there is so much retail interest in the stock. But after that earnings report, when stock goes down 30 points, 10%, and people go crazy and disappointed and saying, yes, more buying opportunity, more buying. Okay, fine. It's going to be dead money. Dead money meaning you're missing all these other opportunities. So basically, in the last 4.5 years, if you just bought the index, S&P 500, you would have done a lot better than Tesla. Tesla has underperformed as a stock over the last 4.5 years. going forward, should I personally create a bias and say value Tesla at $3 trillion market capitalization like Nvidia at $4 trillion because they have the products coming up? I don't know. I don't know. And I don't think Wall Street is going to do that. I don't think Wall Street is going to reward Tesla with an extremely high valuation because they have these things coming. Let's see. Proof of concept, right? Proof of product. Let's have them come out to the market. Let's have them be accretive to revenues and earnings, future earnings. Again, Wall Street looks 6-8 months, a year ahead. What is the revenue stream that's going to be coming from Optimus Robot when they go on sale for $10,000, $20,000 a piece? How many people can afford those? Maybe with scale, the price of a robot will come down to $1,000, like an iPhone, or $2,000, and we'll all have like 3-4 robots roaming around, running around the house, one cooking, one cleaning, one driving us and doing that. Get it? I get it. But it's not accretive. It's not now, and it shouldn't be priced in. So all the Tesla lovers as a company should not be crying foul, saying, "Oh, yeah, stock's down 10%." Yeah, I mean, I don't see anything else going on. And if you did listen to that conference call yesterday, it's pretty dismal, especially the guidance part. Everybody expected the car sales to be down. I get it. What's going to happen to car sales when the EV credits go away? I mean, massive source of revenue for Tesla. That $7,500 EV credit. It's going away. And yeah, so that's one. And a couple other ones. When it comes to these personal biases, recency biases people create in their minds, obviously, they own the stock, Robinhood, Palantir. Again, I'm not saying they're not wonderful companies. I'm sure they are. But for me, to buy Robinhood at $100 today, expecting it to double from here is nonsense. It was already expensive at 75. At 100 is more expensive. Palantir, great, wonderful company. Where are the sales? It's selling 60, 80 times sales. Forget earnings, right? So my point in all of this is stocks, for me, as a trader, investor, different story. As a trader, should be bought and sold. Look what happened to Palantir. Look what happened to Robinhood, when the market sold off 20%. And connecting that to today, market sells off a little bit. Everybody gets like, oh, yeah, buy the dip, buy the dip. I'm like, great, yeah. Buy the dip has been the thing to do for the last, 2.5, 3 years. We'll see. We'll see where it goes. But I cannot, as a trader or an investor, I try not to create biases for myself. That's why I don't day trade, by the way, because you have to create so many biases during the day. Draw the lines and do this and do that. Buy now, sell now, cover now. Like, you're just not going to have success at it. In fact, I urge all of you to go watch the video I put out yesterday, which talks about the rules that applied to trading in 1925, and it still applies today. Although we're automated, we have algorithms running, we have high-frequency traders trading, speed of things is absolutely ridiculous these days, but there are certain rules that still applies, and personally speaking, those are the rules I follow. I talked about it, the 3 Ps, right? Patience, position, sizing specifically, and planning. If you don't have the 3 Ps, I don't care what you are, how much money you have. Market doesn't care who you are. Market doesn't care how much money you have. So, with that said, I am expecting a little bit of a sell-off here, so I'm positioning myself accordingly. We could not, I don't know. But I see what I see in front of me. I see, I'm an instinctive trader. I use all the tools, obviously. But my instincts, as far as I'm concerned, the best traders, swing traders, short-term traders, position traders, are instinctive traders. They follow their instinct. And I follow my instinct. I talk to my members a lot. They go, like, how do you know it's going to do this? And how do you know? I don't know. Nobody knows. Nobody knows what's going to happen the next minute. But what happens is that because of the experience factor, I've seen the movie before, I've seen how things behave, I've seen all these patterns of trading, and those are still valid. Those don't change. And if you apply the 3 Ps to your trading, you're going to be successful. You're going to keep drawdowns to minimum. And when the market makes an all-time high, your account equity should be at an all-time high, as opposed to having these wild swings, right? So, and one last thing when it comes to trading. Again, I said this to my members group. FYI, if you want to become a member, click join, become a member. You'll get my trades live on the Telegram chat group. It's not trading or financial advice, investment advice. But I keep telling him, stocks are to be bought and sold. And stocks move on supply and demand, just like anything else. The price of a stock is ruled by supply and demand. It's like potatoes and tomatoes. And when anybody says anything else, I don't know. I would love for them to come on and we can discuss it, not debate it, discuss it. And I am not a huge fan of riding the roller coaster. I go short, I go long, I have balance most of the time. I'm rarely 100% long, rarely 100% short. Although my account now, the way I positioned it, is leaning short to the short side. And I am positioning for a little bit of a sell-off, maybe 3 to 5% sell-off, nothing more than that. And so we'll see. I could be right, I could be wrong. My trading account, is doing extremely well. My members know. I should do a video about the results, 6-month results, and then I'll do one at the end of the year, like I do every year. I have a small Robinhood account that's doing extremely well. I wish I had done that in my actual account, but I can't because of the size. With a couple $1,000s, you can swing options and do whatever. But yeah, we'll see. We'll see where that goes. I should do just 2 videos, one with the Robinhood account, the history of it, and one with or year-to-date update. I think I should do that next week. So good morning to everyone. SJ, good morning. You missed a good members live yesterday, SJ, but I know you watched the replay. That's another thing. So let me get this straight. Members, if you do choose to become a member, email me, sergio@sergioavedian.com. I will email you the Telegram chat group link. We're about 32, 34, I think, in there at the moment. I think microphone. Okay. I think it's an amazing group. I think they're learning, they're contributing with their ideas. It's not a one-way highway kind of a thing. It's very different than most other chat groups, or what do you call those, Discord and things like that. I put my time into it. I make sure they understand, they learn, and they get a fish pretty much every day, meaning they get my trades live. They follow, they don't. To me, I don't pay too much attention to individual setups or positions. I always have 6-8 positions on. When I do reduce it, like last couple of weeks, I had up to 14, 15 positions on. As a trader, again, you follow your instinct and you follow your gut, and you know when to press and you know when to hold back, when to balance negative or balance to the short side, balance to the long side. And ultimately, all you want is your longs to outperform to the upside and your shorts to outperform to the downside. That's what all we're trying to do, have this balance that works. And sometimes it works, sometimes it doesn't, but results are results. Scoreboard don't lie. What is your scoreboard? Well, what is my scoreboard? My scoreboard, as my members know, account equity. I could literally liquidate everything, cover the shorts, sell the longs, and I will end up with a certain amount of money. Well, if there's that money more than what you started the month with, the week with, the year with, or since yesterday, that doesn't lie. It's right there looking at you in the face. A lot of people create, again, more biases for themselves. They create with these stocks. The bias is, I have unrealized losses. Until I sell it, I haven't taken a loss. I'm not buying that, any of that. A loss is a loss, unrealized or not. Because if I were to close everything today, some with profit, some with gains, that's your account equity. Yeah, it'll come back one day. It may. But then what are you missing on the other side? How many other opportunities are you missing? There's an opportunity cost to all of this. There's an opportunity cost to riding the roller coaster. If the market draws down 20% in your account, definitely with high beta names, it's going to go down 40%. I mean, if your $100,000 account goes down to 60,000, is that going to be allowed? And I talk to my members about the math of that situation too. So math is simple, folks. Math doesn't lie. So, for example, if you have a $10 account, and during the crash that we had a couple months ago, a lot of stocks got cut in half. Big names. Hood got cut in half, more than that. Palantir got cut in half, probably more than that. All these favorites, right? And okay, so your account went from $10 to $5. All right. Well, that's down 50%. It's about right. And that's what happened. Okay, so now we're riding the roller coaster down. All right. Now, a lot of people think when an account goes down 50%, it goes back 100%, you'll be even. But let's do the math. So you go from 10 to 5, you go up the same exact 50% that you lost on the way down, the downhill side of the roller coaster. You go up the same 50% that you just gave away. Again, all this is unrealized losses, let's say, okay? All right. And it goes back up 50%. Where is your account at? $7.50. You're not even close. So for each 50% that you go down, you have to go up 100% just to get back to where you were. You know how difficult that is, guys? You know how impossibly difficult that is? And to me, I go like, I can't do that. It's very tiring, mentally, financially, physically, all that. So what I try to do is that I try to minimize drawdowns. Okay, so if I have a $10 account, I will not go past 9. At 9, I liquidate everything. I may be wrong. I may be right 6 months from now on all of them. I can't play that game because I'm trying to outperform, right? I'm trying to do 5, 6x of the benchmark, which is the S&P 500 for me. But if I allow it to go from 10 to 9, that's 10%. To get back to an all-time high, all I have to do is 13%. That's very doable for me to get back to the old high of my account equity and then be higher yet. But if I do 10 to 5, I have to do 100% to get back up. That's really difficult. So why not do this? Why not allow it only to go down 10%? And then when the market turns, you go up 20%. Allow another 5, 8% drawdown. Allow it to go up 20%. Now you're outperforming the market. That's how you do this. And that's money management. That's risk management. That's position sizing, the 3 Ps, the patience, all these things. But unfortunately, people create these biases for themselves, personal biases, recency biases, all kinds of biases. And then I can't do that. I am not going to allow myself to do that. I have never done it. Well, not never. I've done it. But then you learn. That's when you gain. With experience, you gain all these things, the wisdom that you get. And then, but ultimately, it's all about math. Math is simple, man. Math is not that difficult. So when you figure out the math and your account goes down 50%, and you put your head in the sand and say, it'll be fine. Okay, let's take that back. We had the crash of 20% on SPX. A lot of stocks went down 40, 50%. You put your head in the sand. What if we didn't do the V bottom and came back roaring to an all-time highs? Where would your account be? I'll be only down 10%. You'll be down 50% struggling. And then because you didn't sell, what if we went lower? What if the SPX went to 4,000? You'll be down another 25%. Then now you're taking your account from $10 to $2.50. Now I have to go up 200% to get back to even. But in my case, I was only down 10%. I shut it down. I don't have to participate every day. A lot of people think I have to do this, I have to do that. I trade. I mean, I trade actively, but nothing like, 50 trades a day or a week or whatever. I'll put my share of trades on, but I'll just wait for my spots, pick my spots, and then put them on with the highest possible probability. Because again, I don't know what's going to happen from minute to minute. If anybody says so, they're lying. Nobody knows. Shit, the market makers don't know. They just go with the flow. I try to do the same thing. So do the math, folks. Do the math. If you let an account go from 10 to 7, well, let's do it, more simply. Let's have an account go from 10 to 7.5. You're down 25%. If you went back up the same 25%, okay, you'll be still at 90. You'll still be down 10%. But at least your way up the hill is not as steep and long as it would be if you let it go down 50%. Right? A lot of people do that. A lot of people love the roller coaster. They go, "Oh, it's a long-term investing." Yeah, that's a different story altogether. I do that. I have an investment account. But when I'm trading actively, swing trading, position trading, no. Unless you go like, yeah, I have all this money. I don't care if I let it go. I can't do that. Not because I cannot afford to do it, but it's just my personality, my mind doesn't allow me to ride the roller coaster, right? Because then what happens is that it takes away from your relationships. It takes away from your friendships. It really does. You guys need to understand the bigger picture here. Like at the end of the day, if you look at me, I may have lost 6 figures that day, 5 figures. You couldn't tell. And the next day I may be up 5 figures. You couldn't tell. Even my wife doesn't even understand how I do it. Like, you should look at me and I may have had a horrible day. And she goes like, "How'd you do today?" And I'd be like, "Got killed." And she'd be like, "Well, shit, I can't tell." I'm like, "That's great. That's the way it should be." Because, money is an emotional object. I rather have it than not have it. And it takes me a lot of effort to earn it. And finally, in this business, it's about longevity. It's not a sprint, it's a marathon. It's about having bullets in the gun to shoot again. Don't waste all your bullets. Don't shoot your wad on some stupid shit, some meme stock that you're going to become a bag holder with. And that's what people do, though. They keep doing it. They keep repeating. Definition of insanity. Do the same thing, expecting different results. It doesn't work like that. Not in my world, not in my trading world, because then it'll affect your relationships. It'll affect your relationship with your family because you had a bad day. You have a long face. You're always thinking about, "Oh my God, what am I going to do tomorrow? I just lost 10% of my account value." Well, you could have shut it. You could have liquidated everything, right? It's easily done, as opposed to holding it and saying, "It'll be okay." Great. It may be, or it may not be. Your personal bias of saying it'll be okay one day, it's not going to get you anywhere. It's just going to get you wild account swings, 30, 40% drawdowns, 30, 40% up and on, up and down. And ultimately, you're going to be a basket case. You're going to be an anxiety puppy. You're going to lose some sleep over it, probably. So those are the things that I just want to pass on this channel. We all know, hopefully, what we're doing. Obviously, education is important. It's very important. Knowing what you're doing, when to do, what to do is important. But I just wanted to talk about, don't create biases. They won't do you any good. And do the math. Math is simple, man. And, people who know me ask me, like, "What do you pay attention to? What do you do this? What do you do that?" I go, "I just look at one number. It's getting marked to market every second of the market when the market's open. It's account equity. If you have 50 positions, all 50 are getting marked to market every second. It's moving up, it's moving down. That's your scoreboard. Just like go to a basketball game. You can create all the personal biases. Oh, Lakers going to beat the Golden State Warriors. I'm like, yeah, but look at the scoreboard, right? And if you're involved in sports, that's your truth right there. You know, people say, oh, I could have done this. They should have done that. They could have done this. And then I go, scoreboard. Because a lot of people go like, especially losers, bad losers, they go like, well, yeah, but if this would happen, but I played well, I'm like, scoreboard. You know, that stops all the biases. Because once that hits you in the face, which is hitting you in the face every second of every day, being mark to market, it'd be like, okay, I need to have a reality check. I need to have a talk with myself, as opposed to, for this week, let me just put my head in the sand. But then I keep looking at my quotes, right? I'm like, nah, that's not how I operate. So hopefully my members are learning that. I think they are. So next phase for my members is going to be, because the number one weakness of any trader, number one, is taking losses. When to hold them, when to fold them. And when I tell my members I love taking losses, they go like, what are you talking about? I go, that's what doubles my account every year. I love taking losses because there's math involved in that too. Here's the math on that. I have done 1,000 trades. 500 are winners. 500 are losers. Where should my account be? Even, right? Assuming I lost $1 on each loser and I made $1 on each winner. Okay. Here's the other part of the math. I have 1,000 trades. Okay. I have 500 losers, 500 winners. Okay. All right. But this time I lost $1 on each of the losers and I made $2 on each of the winners. Where is your account going to be? Up 100%. Simple. Math is simple. You don't have to go too far. You don't need to have a PhD in data science or whatever. Simple. So I was looking at my numbers yesterday, because I look at my numbers not weekly, probably not daily, but I look at the account equity every single minute of the day. What I look at is that overall performance, right? Because you have a certain set of data that you can look at. If you were to guess, I don't know how many of you are here. If you guys were to guess so far this year, with all the trading, 6 months, almost 7 months now, what do you guys think my win rate is overall? Win rate. Win rate meaning, you know, people die about that statistic. Win rate, win rate. Okay. Oh, I have 80% win rate. I see these YouTube jockeys or, you know, FinTwits. I have a 90% win rate. Fantastic. What do you guys think? Put it in the chat if you guys care. What do you guys think my win rate is at so far for the year to date for 2025? Any guesses? No. Somebody guess something. Anyway, so I was looking at it. It's 53.7%. Huh? Uzi, you're way high. It's 53.7%. Okay. All right. Year to date, how much is my account equity up? How much is my account up? Uzi, that number that you put up is exactly how much my account is up. I'll post it. I have nothing to hide, nothing to prove. So I'm at 70% account. It's a 6-figure account, by the way. It's not a joke account. 70% up, 7 months, 53.7% win rate. How do you guys think that's getting accomplished? By the Magic Mountain roller coaster? No. So yeah. What do you say about that, Uzi? 70%? You hit it actually you hit it dead on the head. Actually, to me, it may be better because I'm short the market. If the market's going down, then I'll be okay. Probably a new equity all-time high. But with just 53.7% win rate, what does that say? It just says exactly what I'm doing, what I preached. Take $1 loss, take a $2 gain. Or in this case, to be 70%, $1.7, $1.70 gain. So you guys figure it out yet? It's not hard, but it's very hard to take losses. And when I say to them, take losses, man. They go like, but Serge, I take a loss on this, I can take a loss on this again. Okay. And that means you're not allowing the winners to make up for those and more. That's what you're doing. You're doing exactly what every trader does. They take small gains and then they become bag holders. I'm like, no, it doesn't work like that. So let's see. Lucy says, so we basically just to be a virtual partner. Absolutely. I just said it. If you missed that start, go check it out. Watch the replay. Watch the replay. I told 53.7% win rate, and I'm up 70%. Who knew? Who knew math would work out like that? So if I told somebody, what's your win rate? They go, oh, it's 90%. I'm always right. I'm like, how much is your account up? It's up 28%. I'm like, for all that trading? For all being right? Now, imagine, Uzi, if I increase my win rate to 65%, then I'll be up 140% for the year. But it's been a tough year. I'm not going to lie. Well, tough. I mean, being facetious, 70%. But with all the overnight risk this year that I'm carrying, with all the possible tweets coming out of Washington, with all this shit going on, actually, I think this year is a better performing year than last year. Last year was like coasting, 120%. Actually, the video is on the channel. You guys can go check it out. And last year, my win rate was only 58%. I'm rarely over 60%. But I couldn't care less about that statistic, win rate. I mean, literally, you could be like less than 50% and still double your account because you may have like one huge winner. Like you may be in Hood options or something, or Palantir options or whatever. One. All it takes is one. But when that one presents itself, don't cut it short. It's a good racehorse. Let it run. Let the damn thing run. But people can't do that. What people do, they take all these small gains. Oh, 80% win rate, 80% win rate. And what's that getting you? Other than a lot of adrenaline. Like, I couldn't care less. But maybe I'm different. So when, I had a couple of members join this week, new members. One of them immediately said, he trades, he does things a lot differently. Actually, I don't do a lot of things differently. I do what great traders do, or good traders. That's all they do. We all do this. We don't do this. We can't, because we get the math, right? And so if you're going to do that, yeah, you're going to take a lot of Xanax. You're going to have a lot of sleepless nights, wake up at 4 a.m. with anxiety attacks. I'm too old for that, man. It's just, chill out. Anyway, so let's go to the positions. Let's see what kind of disaster. Well, not disaster. I hope we're tanking, because I'm biased short. Okay, folks. So link is up here. So good morning, SJ. Yeah, that was you. Manny P, good morning. Luis, good morning. What's up, Rook? Why did I call him Rookie? Young man getting his master's. One of my members. So what we did is we named. Well, I used to have a name on the desk, so I kept that name. But now we're kind of naming or nicknaming all our most our members. Most are choosing names for themselves. So we'll see. We'll see how that goes. I think it was my idea. I think it was a horrible idea. But anyway, so here we are. Where are we today? Not much. Watching paint dry, honestly. Let's go through the positions. What do we have? We have, well, I was long 2x ETF of Apple. Closed those up. We're done with that. I am short 2,000 shares of Joby Aviation. And at the same time, I'm short the puts that are expiring tomorrow. We'll see how that goes. I'm short the physical shares. And just for a little hedge, I bought some calls in case it rips here. I think this is going to 10, so it's going to be a wonderful little trade for me going forward. I should have probably sold it this morning, but anyway. So I'm long 5,000 shares of Lithium Americas Corp. Average cost 333, and it's 322. But I did cover calls last week on the weekly options, took in 13 cents. So position is overall is about even. I am along a synthetic on NUGT, which is a 2x ETF of gold miners. I think gold is going to have a massive run from here. It's been going consolidating or going sideways for almost 4 months now. And we're going for the breakout. It's not a full position yet. I'll probably have a chance to do it. So I'm short the September 75 puts with about a quarter or close to a third of that money that I took in. I went and bought a call debit spread. So I'm short the 75 puts, long the 80 calls, and short the 95 calls. And I put this position on with about $3.70 in credit. And I explained to my members yesterday how I choose my strikes, my expirations. So I'm not going to get into that. It's for them. Next position is I'm long. This is a long strangle on Open Door, one of the semi meme stocks, or not semi, it's a meme stock. I'm long 5,000 shares. I'm short the 2 puts and short the 2.5 calls. Combined, I took in about 40 cents. If I get called away, they can have it. If I get assigned, I'll get assigned another 5,000 shares, which is fine by me. That's called a long strangle. Next position, SoFi. I'm short 2,200 shares of SoFi, and also short the puts, which are expiring tomorrow. There is still some meat left on those bones, so we'll keep the position as is. And 2 more positions. I am in a pure synthetic with September options on SoundHound. I am short the 13 puts and long the 15 calls. A lot of people ask me, like, why do you do synthetics? It's much more capital efficient as opposed to buying 1,000 shares of the stock. Although in this case, it's not, because some brokerages raised the requirements. So we'll see. We'll see where that goes. And yesterday, I started buying some puts on SPY. I bought the August 15, 630 puts. I'm up to 20 puts, 20 SPY 630 puts. But this morning, when they were about 13, 14 cents, so you guys are going to say, what is 13, 14 cents, Sergio? It's a lot, actually. When they were about 13, 14 cents, I went and sold 0 DTE 630 puts against my long August 15th puts. 20 options, taking $260, $70. What does that do? It lowers my cost basis, right? I'm going to do it again tomorrow. And once we roll over, I'll leave the puts alone. I'll still do it. Even if I do this, a week, I'm going to lower my cost basis probably by $1. And if the market goes higher, I'm going to lose $1 on my long puts, but then it kind of gives me a little bit of a cover. So I will add to the puts. I think we're going to have a sell-off. Not a meaningful one, but a reasonably decent sell-off. And yeah, those are the positions. I got 15 minutes. Let's look at a few charts. This is SPY. Grinding higher, actually snapping back to the trend line that we broke down from. This is 1 year, 1 day. Triple Q. Same thing, grinding higher. All-time highs. And Apple. Apple is trying here. Earnings are coming up on all the Mac 7. By the way, Google's earnings came out yesterday. They were really, really good. I'm long Google in my investment account at 143. Look, I lucked out completely. Completely lucked out. But that's why you have an investment account and a trading account. And an investment account, I try to keep it 1 year, 1 day. Take advantage of lower capital gains taxes. And in your trading, it's all short term. You're taxed at your ordinary income rate, so be careful with that. Let's look at the Tesla. 303. Bounced a couple of bucks from the low at 301. It's testing the 200 EMA. I mean, I have that little wedge drawn. I don't know. What is the catalyst for the stock to go up other than FinTwits yelling saying Tesla is cheap at 300? I don't know. But again, I said Tesla has been dead money. A lot of people argue with me. Let's look at it. Where is Tesla today? Tesla today is exactly 300, right here. Let's go back. All here. Folks, that's October of 2021. 300. What say you, folks? Dead money? Now, has there been wonderful trading opportunities? Yes, look at this thing. Goes from 100 to 300, then goes back to 150. From 150, goes to 488, then goes to 220, then goes to 350. You trade. Stocks are to be bought and sold. That's all I'm saying. Tesla has been dead money, and it's going to be dead money for a while until all the new additions to the revenue stream and earnings stream show up. Become a reality, basically. So don't price it in today because they have it coming. Price it in. Start pricing it in when they start selling these things. A couple of the short positions I'm in. SoFi, I'm short 2,200 shares. I'm short pretty much market prices, but I'm also short to put. SoFi earnings are coming out next week. MACD did give it a little sell signal, but still positive. So I like SoFi short here. The other one I'm short is the most ridiculous valuation I've ever seen in my life. This is the flying cabs or taxis or whatever the heck they are. Company's worth $15 billion called Joby Aviation. Those are the EV tolls. You talk about expensive, folks. Company's worth $15 billion. Actually, compared to this, Tesla is cheap. $15 billion valuation, not one red penny of revenue. Forget earnings. Not a red cent. So I can say it's selling 300 times sales. They don't even have sales. I mean, that's why I'm short, and I'm going to keep pressing my short. That thing is going to die. I'm long 5,000 shares of LAC, Lithium America. It's either building a bull flag or we're done going up. I'll probably sell it at some point. And open door, sorry. That's the long strangle I have. If it closes here tomorrow, it could be anywhere. I don't know. If it closes here tomorrow, I will be called away. If it's below 250, we'll call the short strangle, then the 2 puts and 2.5. These are expiring tomorrow. They're going to expire worthless and lower my cost basis by 40 cents. And then either I'll sell it or I'll sell calls against it or whatever. I have many choices. And my members are big. I was big in it too, and I sold it too early. They're in WeRide. They've been in it in the sevens, mid sevens. I posted on my chat group today. Don't forget about my saying, bulls make money, bears make money, pigs get slaughtered. Don't be a pig. 7.5 to 10 and change is 30%. Who's going to give you 30% in a month or two? That's why it's called trading. And I am watching Lululemon like a hawk. Down another 4. Now we're making a lower low, which is what I expect. 200. I'm hoping it gets to 200. And MACD doesn't. I want it to roll over, but then bullish divergence is setting it up here. This could be the mother of all bullish divergences. Yeah, I'm watching Lulu. I'm watching Lemonade. Not the lemonade stand, the company Lemonade. It's consolidating here right above the 50 EMA. Next leg up probably coming up on this. I'm really, I like this company quite a bit. Upstart, I was looking at. Earnings are coming out in a week or so on that. Probably a good short in here. A lot of these high flyers like Oklo. New high today. Good volume. Again, another company that's valued at $8 billion with not a penny sales. They have a couple of drawings or small nuclear reactors. I mean, look, valuations in the marketplace, I don't have to say it. They've gone crazy. Ridiculous. Here's Hood. Yeah, pull back a little bit, 113 to 100, and then they're all panicking. They're like, oh, I'm like, it's crashing. I'm like, what do you mean? It's down 10%. On the next retest of the high, I will definitely short Hood. Palantir, pretty close to a new high. Grinding higher, $155 stock. We'll see what we do with that. A couple of other names I'm watching. I'm watching Rumble. $10 number. I like this pattern. It tried to break out and got rejected a couple days ago. I'm watching it closely. Soundhound. Consolidating here above the 2050, 200 EMAs. MACD above 0. I like it here. That's why I have the synthetic, but I will definitely press on it. And gold. Down a couple days in a row after retesting the high, which is expected, pulling back to 20 EMA, but I'm long NUGT. I want to add to this position. I tried to add this morning. It didn't work out. On a breakout, I see this going to 92. I explained to my members yesterday how I measure things. That's why I'm short the 95 calls and long the 80 calls. That's the call debit spread that I have. TLT, interest rates. Interest rates have been going up. While President Trump wants 300 basis point interest rate cut, not a goddamn chance that's going to happen. And today, President Trump was about to visit the Fed. I would have liked to be a fly on the wall in that meeting between Jay Powell and President Trump. And I know he's not too fond of Jay Powell. He wants him to cut rates. I go, President Trump, every asset is at an all-time high. Why do we need interest rate cuts? Oh, that's because we owe 38 trillion. I got it. And dollar index, I watch at least a couple times a day. DXY is the symbol. Yeah, we're rallying a little bit, but that's what the dollar has done this year, folks. Is it a coincidence that the stock market, gold market, Bitcoin are at all-time highs? Look at that slide, 11% slide. And this is against a basket of currencies. Last but not least, VIX I watch once in a while. Not that one, this one. Making a lower low today at 15.15. So that means if VIX is at 15, it's cheap to buy options. It may not be worth selling options because volatility is so low. When do we sell volatility? When VIX is at 20, 25. Here, you buy volatility. But to each their own. 15 is good support, although it's actually more than normally elevated levels. VIX about 12, 13 is the range. We've been stuck at 15, so VIX is a counter indicator to markets, as you know. But what else am I looking at? Let me look at my little watch list. What am I looking at as far as candidates? What am I watching? Okay. Yeah, the Albemarle. I added that to my watch list. CCJ. All these lithium stocks and rare earth stocks are doing extremely well. I think it's MP. Yep. That's MP Metals. That's why I was like in LAC, but it kind of died. It's not following through. I should have bought PLL. I looked at the same day. I bought LAC as opposed to PLL. PLL has gone from about 7 to almost 9 now. What else are we looking at? Rigetti, some of the quantum computing stocks broke out of this wedge, holding really well. That's why I think I'm just going to go add to SoundHound any day now. Yeah, it's just consolidating. A break above 13. We're going to look at 16, 18 on that one. I'm definitely going to be in there. Chipotle had a nasty, and I guess they're not eating as many burritos, the youngsters. See, again, it's just like a stock-specific thing. Market all-time highs. Chipotle is making not all-time, but 52-week lows almost. Circle. I'm interested in the FIG IPO, Figma. Yeah, Circle. We'll give it a chance at the 50 EMA. Core view. Yeah, lower lows, lower highs. Stay away until we get to 200 EMA on that one. What else? Yeah, that's about it, folks. Kind of a ho-hum day. Hopefully expecting a sell-off at some point. Next couple, 3 days, maybe a week or so. We'll see. We shall see. Yeah, that's about it. NVIDIA making new all-time high after new all-time high. $4.2 trillion company now. Had a little sell-off coming back. All these are trying to work on bearish divergences, actually. A lot of people into Oscar. I told them. Some of my members are in it. I said, break even. Take your break even. Get the F out of Dodge. No, it's going to 25. I go, okay. Hey, man, what can I do? Stocks are to be bought and sold. Not every stock, but once in a generation, you run into an NVIDIA or a Palantir, different story. And then most people go sell cover calls on it. I go like, man, that is the wrong way to do this job. Ooh, SMCI is 53 now. It's grinding higher. After that pattern breakout, I would have expected it to be a lot quicker than what it's doing. And I guess it's not. I will add to my puts for sure. When I say my puts, SPY puts. And I'll sell the 0 DTs against it. What else? Yeah, that's about it. That's about it. Let's go to the front. Let's take a look. Yeah, nothing is going on really. Not much is going on. Yeah, it's giving me a chance on NUGT. I'll add, open, leave it alone. SoFi, leave it alone. I'm short to 21.5, 21 and 20.5 puts. I may get a sign, close the short position that way, or I'll sell the puts again for next week. Earnings are next week on SoFi. Joby, I will add to the short side. I'm short the puts, they're expiring worthless. I'm short the 16.5s, 16s and 15.5s. Took in another 60 cents each. Keep raising my cost basis. It's called a covered put as opposed to covered call. You guys have to watch some previous episodes of either Power Hour or Trading with Sergio to understand what a covered put is. Okay, folks, much love. Stay safe. Be healthy. Hopefully I can do Power Hour tomorrow. I have a couple of presentations at 10. So it's not going to be at 10. If I do it, maybe I'll do it at 12 noon to market close. We'll see. But please subscribe. Please share. Please put a thumbs up. And turn on notifications so you know when I'm coming on. And with that said, any thoughts on Dell? Last minute, you squeezed that in there. Okay, you have 1 minute. Let's see. Any thoughts on Dell? It's a high-tech stock, right? It should be doing well. Yeah, grinding higher. It's a market performer, man. It's in an uptrend. Buy the dips. Hasn't made an all-time high yet. Is this an all-time high in this thing? The all-time high. Let's see, 3 years. No, it was 180. Yeah, underperformer. So this stock should be at an all-time high. If you're not at an all-time high, but the market all-time high, then you're underperforming. So again, like for example, a stock like this, it's exactly what the price it was February of 2024. 2 years, 2.5 years. No, year and a half. What am I saying? Yeah, year and a half. Dead money. Is it a wonderful trader? Heck yeah. Low of 67 to 130. Low of 89.90 to 150. Yeah. Short 150 to 60. I mean, look, stocks are to be bought and sold. You know, look at that versus a Palantir chart, all-time high, or a Hood chart, you know. It should be making all-time high. It's not. Okay, it's an underperformer. Yeah, that's my opinion, and I'm sticking to it. And it's not trading or financial advice, folks. All right, I'll see you guys hopefully tomorrow. No problem, Uzi. So figure that math, Uzi. Figure it out. Look at your account. Look at your account equity. What's your win rate and how much you're up for the year? Put the win rate in the trash can. Don't try to be right all the time. It's okay. You could be right half the time and double your account. Take my word for it. Anyway, so see you guys later.